Very good evening and welcome to the India Development Debate. I'm Tamanna Inamdar and we are seeing another day of horrific and prolific increases in COVID-19 cases. Over 70,000 nationwide. The latest figures coming in this evening are also equally alarming. Let me just run them by you before we begin. In Mumbai, in the last 24 hours, 8,646 new positive COVID-19 cases have been registered. In Delhi, the number is 2,790. Punjab is 3,187 cases and Gujarat is 2,410 cases. Clearly an upswing, a trend continuing, which is worrying. Our only weapon right now, apart from social distancing and masking, is the vaccine. Phase 3 day 1 has begun and those above 45 years can now get vaccinated. We'll have to wait and see how that pans out. We're focusing on that story this evening, but we're also drawing your attention to an oversight which took place in the last 24 hours. Now, we reported last evening on this show how the government had decided to slash interest rates on small savings schemes by close to 1% in some cases. Just a few hours later, the finance minister put out a tweet saying that this was an oversight and that entire order has been reversed. Our question now is, for how long? Is it inevitable that interest rates on small savings schemes will be cut? They are not aligned to what the market is offering right now. How long can the government keep affording to dish out more? And then what is the solution for lakhs and lakhs of small savers? We're coming up with that discussion as well. I also have an interesting, slightly offbeat chat for you with a filmmaker, a content creator who has been the epitome really of the new wave of Indian content. Alankrita Srivastav is the maker of Bombay Begum. Apart from many other shows, Lipstick Under My Burqa is also one of them. I'm going to be speaking to her about what it means to be a content creator in these difficult times. All of that coming up, but first let me take you through the headlines this evening. COVID continues to be a top concern. Over 72,000 cases in the last 24 hours nationwide. Mumbai's numbers are the highest this year at over 8,646 cases. Meanwhile, vaccines available for today for everyone above the age of 45. If you're in this bracket, please go and register yourself. Finance Ministry withdraws its cut of interest rates on small savings schemes, says it was an oversight. The move comes as a relief to savers, as yesterday the rates were cut by up to 110 basis points. But for how long will this remain? March GST mop-up is the highest since the tax was introduced, coming in at 1.24 lakh crore rupees. Collections have now been higher than 1 lakh crore rupees for 6 months straight. Smart recovery underscores the last trading day of the week. Sensex clocks a 500-point gain led by banks, Infosys and Reliance. The metals party helps reverse a 2-week losing streak. US markets trade in the green. S&P 500 tops 4,000 for the first time. And positive news on the oil front. Reports suggest that OPEC Plus has agreed to resume gradual monthly output hike. The alliance is currently cutting production by just over 7 million barrels per day in an attempt to prop up prices and reduce oversupply. And phase 2 of polls for 30 seats in West Bengal and 39 seats in Assam wraps up. Voter turnout is 73% in these seats in Assam, over 80% in West Bengal. But all eyes on the battlefield of Nandigram, where Mamata Banerjee faces off against colleague turned foe Suvendu Adhikari. Meanwhile, Prime Minister Modi sharpens his attack, says the BJP will win over 200 seats in West Bengal. We begin again with the update on the COVID-19 front. It continues to be worrying. We are clearly in the midst of a second wave with the numbers continuously climbing. 72,330 cases have been clocked all over India in the last 24 hours. Remember, the all India figures come with a lag. So we have these figures from this morning. Meanwhile, the numbers have started trickling in this evening for various states and cities, as I explained on top of the show. The leader of the pack in the data so far is Mumbai city with 8,646 cases. The worrying trend is that very slowly, though, the number of deaths have also begun to rise, and this is truly a big concern because we don't want the hospital infrastructure, the medical infrastructure to be overwhelmed. Meanwhile, Phase 3 day 1 has begun and all those above 45 can now go and start getting vaccinated. We're still waiting to see what those numbers look like. We also spoke today with Dr. Guleria of AIIMS, director of AIIMS, who talked about how universal vaccination is some time away in India.
So at the end of the day, we will need to vaccinate all adults and even children if you really want to have a good amount of immunity and come out of the pandemic. But we have to balance that with the number of doses that are available. Even if you start talking of what we are doing from today, that is 45 years and above, that is almost 40 crore individuals. That means 400 million people, and we need 800 million doses to really cover all of them. So we really need to have enough doses available to be able to vaccinate this group, and then we move down the priority list. To do that, we need to have more and more vaccination sites so that people come to these sites, they come early, and a maximum number get vaccinated in the shortest possible time. And then we move on to, let's say, 30 years and above, and gradually to try.
All right, let's get to the very interesting and, in my view, underreported story of the day, which is a decision taken by the Finance Ministry last evening that was hastily reversed. So, a cut in small savings rates was announced last evening, and a fairly deep one ranging from 70 basis points all the way up to 110 basis points on a slew of small savings schemes like the Kisan Vikas Patrika, the Public Provident Fund, Sukanya Samriddhi scheme, the NSC, etc. This whole clutch of small savings schemes to which a lot of Indians subscribe to. We are a country with no real social security scheme or social security blanket post-retirement, and this is the go-to for several Indians, which is why the interest rate that is offered on this, and this interest rate is offered by the government of India, which borrows these funds to fund its many activities, that interest rate is very keenly watched. That interest rate has been on a downward trend over the last couple of years, I would say, and the last big cut came about a year ago. The cut which was announced yesterday was not just a cut, it was quite a deep gash. For example, if it had gone through, the Public Provident Fund interest rate would be the lowest in over 40 years. It was hastily reversed. The communication that came from the Finance Ministry and from the Finance Minister actually on Twitter called it an oversight and said that the same rates will continue which were there for the last quarter. Now, many are speculating as to the reasons for this. Some are saying it could be linked to the ongoing elections in 4 states and 1 union territory. Just as an aside, there's some data out there which shows that at least 4 of these states, West Bengal, Assam, Tamil Nadu and Kerala, where elections are going on, contribute to over 20 to 25% of all the collections which come in these small savings schemes. West Bengal is supposed to be topping that list. Now, we don't know if it's related to elections, but that's not the crux of this story and discussion today. The important question is this reversal long term? Because the notification which has come today talks about the same rates being put in place up till the 30th of June. So what happens after the 30th of June? This is a very crucial question because for a long time we've all known that the interest rates that the government offers on these small savings schemes are far removed from reality of what market rates are like. So how long can this sustain? To speak on this entire issue, how the Finance Ministry has responded to it and what could come next. I'm joined today by Tamal Bandyopadhyay, author and senior journalist, and Pankaj Matpal, MD of Optima Money Managers. Welcome to both of you. Great to have you on the show. Tamal, let me just begin with your take on what we've seen in the last 24 hours.
Well, as somebody said, April Fool done was one day in advance, 31st March. A lot of drama. But let me get into a little deeper into the issue. You know, this is, you said how this 4 decade, had we gone ahead with this cut, it would have been 4 decade, lowest in 4 decade. Yes, rightly so. But, you know, this small savings is always a politically very sensitive thing. Like, for instance, today State Bank of India offers 2.7, if I'm not mistaken, 2.7 on the savings rate, which is lower than what it was in 1960s. Do we talk about it, complain about it? No. Many of the banks are offering 2.75, 3% for savings bank rate. And as I said, 2.7 or 75 is the rate which we saw last in 1960s. Historically, Reserve Bank of India has all along been saying that the small saving rates is actually one, it distorts the entire interest rate architecture. It delays the monetary transmission because, it's not linked to the market, and the banks are not able to cut their savings rate because small savings rates are higher. So the banks fear of losing their rates, losing the depositors. That has been the case. And there have been many committees, Dr. Rakesh Mohan Committee, Reddy Committee, and finally Shamla Gopinath Committee, which was done by, and the current RBI governor was a part of that committee. If I'm not mistaken, 2010, then Finance Minister Pranab Mukherjee constituted the committee to look into it. 2011, the committee gave it results. It has linked to all the small savings with the comparable maturity market rates. That's the government securities, etc. And with a spread of anywhere, maximum spread between 25 basis point and 1 full percentage point. It was to be done every year. It was done, but it was not done actually. Now, 2016 government said it will be every quarter. Again, you have seen that it's not been done. We had seen this in the first quarter of last year. And now, last evening, it came such a sharp cut. Now, to answer your question, is the cut called for? I would think that they missed the bus. The cut was called for some time back because, if you look at the government bond yield, 10-year bond in August was 5.75, which has gone up now 6.20. 1-year treasury bill gone down to 3.31 yield I'm talking about, which is now 3.75. Similarly, 5-year paper somewhere last year was 4.85. Now it's gone up to 5.85 or so. So if it is linked to the government rates, which is supposed to be, now the government bond yield was far lower 6 months back. So this kind of sharp cut, had it come in September, right, I would have said, yes, that's the right thing to do. Now, when the yield are rising, inflation is on the rise, and we are talking about the demand is coming up and consumption is growing. So now this is not the time to cut. I think, if at all, it should have been cut earlier, not now.
Sure. So you made the point that they may have missed the bus, but the larger picture, Pankaj, and I want you to come in here, is that can we expect this reversal to also sustain? Because it may be linked to political reasons. Tamal also said these are very politically sensitive rates because it impacts a large chunk of Indian savers. Everyone tracks it closely. Long term, are these sustainable rates?
Yeah, Tamanna, I agree with Mr. Tamal that there is a time when the government should have thought of reducing rates. But still, I'll say, because these rates are linked to government securities yield. And if the yield is 6.20 and government is offering 7.10% on PPF and on Sukanya Samriddhi scheme, the rate of interest right now is 7.60%. So definitely it is higher than that yield. And though it is said that 0.25% to 1% spread is there, but still I feel that it's difficult for government to manage with these rates. So going forward also, I expect that anytime government will announce that again next quarter or maybe because these are linked and every quarter rates are reset. So there are chances that in coming times, government may again announce reduction in rates. So what happened this time? Maybe as you are mentioning, because of election pressure, government has again withdrawn that. But it is quite possible, and if not very soon, but people, investors, they should understand that once these rates are subject to reset every quarter, it may happen anytime.
Yeah. No, so, I think the other important question, and a lot of people watching this program are possibly asking themselves this, especially if they are dependent on these saving schemes. Pankaj, this question's for you. That do they have to be prepared for lower rates in the short term, which may just not even beat inflation or may barely beat inflation, and they need to rethink their long-term savings options. This is not a sustainable model.
Exactly, I agree with you, Tamanna, because see, when people invest in these schemes, especially in Sukanya Samriddhi Yojana and the PPF, these are long-term products, like 15 years of PPF or 21 years maturity of Sukanya Samriddhi Yojana. So investors thinks of achieving long-term financial goals. So definitely, if you are thinking of long-term financial goals and these rates are subject to reset every quarter, how can you plan based on these rates? And second thing, if not immediately right now because inflation is under control or it is rising, I'll say, so in this situation, government may not reduce rates sharply, but if you're planning for 15, 20 years, then definitely I don't expect that rates will remain very high. So if you want to achieve your financial goals, you want to create wealth, or you want to plan something. So in such scenario, it is very difficult because I remember when in 2015, this Sukanya Samriddhi Yojana was introduced, the rate of interest was 9.10. And immediately after that, in April 2015, rate was increased to 9.20. So that time, if somebody invested in the scheme, they must have done a calculation based on that. Considering 9.20, how much wealth they'll be able to create or how much they want to accumulate, for that how much they need to invest. But that does not work like this. So at least when you invest in market linked product based on the performance history or past history, at least you take an average of that and based on that you do some calculation. And we have seen in some products, though those may be market linked, but still we expect that that kind of returns can be achieved. But if it comes to small savings scheme, it is very difficult to expect high returns. If it is not 7%, I'll say that you cannot expect 9% from small savings schemes in future.
Do you think there will be, Tamal, you spoke about several papers which have talked about linking these rates to the GSEC. There have been suggestions to have inflation-linked products as well. So it's very clear what small savers are getting. But do you think there will ever be the political will to do that in a country where small savers really don't have too many options?
No, I absolutely agree with you that it's a very important in a country like India where we don't have the safety net. So it's a very important instrument for the small savers and for the pensioners, for senior citizens, and also for the government. Because if you have seen 2021 fiscal year, we just got over yesterday. Government has had access about 5 trillion, 5 lakh crore from the, I'm talking about the center. Then the states also do that. So this is one of the way of diversifying resources for how to manage the fiscal deficit. So it's also from the government point of view is very critical. And from the retail point of view for Aam Janta, this is a zero risk. So as you are aware, Reserve Bank of India is trying to encourage retail participation in bond market. Now, I don't know what is going to happen there. We have not come across the detailed guidelines from RBI. But in some sense, it is the way it's a passive retail participation because your money is absolutely safe and is used by the government. But what you said is this: can this honeymoon of having high rates could continue? And what happened to the inflation-linked bond?
Exactly. Just last word from you, Pankaj. What is your advice to small savers right now? They have some security for some time. Possibly these rates will start coming down over time, but not massively. What are the options they can look at?
You see, these schemes have government guarantees, so definitely means these are safe for investors. But at the same time, these schemes will not help them to achieve their financial goals. It will be difficult. So investors must think of diversification in their portfolio. Along with these schemes, they must think about market-linked product, especially mutual funds, because that gives you opportunity to invest in different asset classes, and that is required. There may not be guaranteed mutual funds, but we see that there is scope for creating wealth. You can earn higher than inflation. That is possibility. But at least in this, if you invest in small saving schemes, chances of getting good returns are very limited.
So tough call ahead. One thing is for sure that the current regime of interest rates and small saving schemes are not linked to market. They're not linked to market reality. But the political reality also is that it would be very difficult to link them to exactly what the market rates are because of the high dependence on these schemes by a chunk of the population. We need to come up with perhaps savings products which give fair returns to investors as well as ensure that the government is not paying through its nose.